Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of Brent crude oil and spot gold. ICE Brent crude oil futures. A second bullish white Mariposa and a quite decent one as well. The base of the action was centered on the 50% Fibonacci line of the September-December 22 move at 84.99. With the highest of the moving averages, the medium moving average, currently 84.66, just below that. The move up tried to reach the October 2018 high at 86.67, but turned away at the last moment. Now, this level is quite important as it's the main roadblock in trying to fill in the changeover gap from late April, originally between 85.89 to 87.46. Vaulting over this resistance would give a good chance of filling in the gap, plus importantly setting up the possibility for this month to be a monthly key reversal. Overall, this was yet another close over the dark blue upper trend line, currently at 80.22 of the April to June bearish expanding wedge pattern. Now, before I delve into this pattern too much, which I will shortly, I'd like to take a step back for a moment. You see, in very early May, the market broke down below the bright red highlighted December 2023 to late April 24 lower bull channel line. This gave some potentials below for this pattern. The primary target in the 78 even zone was reached, but the secondary hard to reach target X2 down in the 72.30 zone, well, that is still live, though I am increasingly debating whether to retire this potential target given the recent break higher. Additionally, we had a mid-March to end of April head and shoulders top with a purple neckline, which is just above the market, currently at 87.47. This, along with the October 2018 high at 86.67 and the 50% Fibonacci line of the November 2020 to March 2020 move at 87.41, these all together provided the next set of resistances on any attempts to fill in the overhead gap. However, that is not the end of the matter. You see, this break higher from the dark blue bearish expanding wedge pattern still gives us some potentials topside. Thus, a primary target X would be in the 89.45 area, with a harder to reach secondary target X1 up in the 92.05 area. Again, this is not all. You see, I've been studying the action since April quite closely, and what I had initially thought might be a bearish halfway hesitation has morphed and developed into a late April to date diving board pattern, which goes a long way to explain the cause of the recent bullishness. And finally, we are set up this week to make the month of June a possible monthly key reversal. Thus, if we have a close on Friday the 28th, so that's today, either over 87.86 or under 81.62, then we'll be on. Right now we're looking at a possible lesser outside month pattern, and we will continue to do so unless the topside gap is filled in. And we are actually very, very close to doing that. So far today, a gapping move higher from the open that has punched through the October 2018 high and is set to test the 50% Fibonacci line and a purple neckline combination that's just a little higher. Spot gold. A reactionary bullish white soldier yesterday after the previous session's significant bearish black crow, pulling back up over the important 50% Fibonacci line, projected Fibonacci line at 23.01 and halting just over the lesser Fibonacci line at 23.26. Below is the dark blue highlighted April to date neckline, currently at 22.92, whilst overhead is the bright red lower time, currently at 23.47, the early October 2023 to mid-February 2024 bullish Andrews pitchfork, plus also the green highlighted short medium moving average, currently at 23.40. Now, I should explain my inclusion of the dark blue neckline. In a discussion amongst some technical analysts a few days ago, it became obvious to some that we had a possible April to date head and shoulders top. I was not and am not wholly sold on this idea, though I do see some of the merits of this idea. To me, the action looks more like a possible double top type action, but having the same neckline for both highlighted, as you can see there in dark blue. It does help in matters. Now, so far today, an early dip that has since seen a move higher, though we're not as far as the green highlighted short medium moving average overhead, but we're close. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.